Hello, this is your interactive accountant's news brief. If your business is thinking about where to grow, expand, or relocate, one new report is shaping how executives are making those decisions. The Tax Foundation's 2026 State Tax Competitiveness Index ranks states not on how much tax they collect, but on how their tax systems are designed. And once again, Florida is near the top, while high-tax states like New Jersey remain near the bottom. The index evaluates corporate taxes, individual income taxes, sales taxes, property taxes, and unemployment insurance taxes. It is widely used by business owners, site selection teams, and investors as a benchmarking tool. It does not measure workforce quality, infrastructure, or market access, but it offers a clear look at how tax structure impacts business costs. So, what exactly is driving Florida's advantage? First, Florida has no individual income tax. That is a major benefit for pass-through businesses, business owners, and highly compensated executives. It also makes Florida more attractive for recruiting and retaining talent. Florida does have a corporate tax, but its structure is relatively simple and competitive. That reduces administrative burden and compliance costs compared to higher tax states. Property taxes in Florida are also significantly lower than many northeastern states, including New Jersey, which consistently ranks among the highest in the nation. Florida's unemployment insurance tax system is stable and predictable, helping growing companies plan payroll costs with more certainty. These tax advantages are reinforced by population growth, a lower cost of living, and a generally pro-business regulatory climate. When you compare Florida and New Jersey side by side, the cost differences become clear. Florida's lack of an individual income tax makes it especially attractive for high earners and remote workers. New Jersey's complex income tax system increases operating costs. Florida's corporate tax system is simpler, while New Jersey continues to carry one of the heavier corporate tax burdens in the country. Florida's sales tax system is broad and easier to navigate for multi-state businesses. New Jersey's sales tax is slightly lower on paper, but more complex in practice. And property ownership costs are dramatically lower in Florida than in New Jersey, which is a major factor for companies with large facilities or warehouses. For tax-sensitive businesses, Florida's structure can be a real competitive advantage, but tax structure is not the only factor. Industries that are cost-sensitive, planning rapid hiring, or focused on after-tax returns tend to benefit most from favorable tax systems. At the same time, states like New Jersey still offer strengths, including access to major Northeast markets, dense talent pools, and world-class infrastructure. The takeaway for business owners is this: Florida's strong ranking in the 2026 Tax Competitiveness Index reflects long-term policy choices that favor simplicity and predictability. But no single metric tells the whole story. Smart decisions weigh tax structure alongside labor markets, infrastructure, and customer access. For deeper planning, business owners can use tools like interactive accountants or check out our newsletters on LinkedIn. They offer tax strategy resources to model what these differences mean for the bottom line. We will continue tracking how tax policy shapes where business growth goes next. For more resources on tax strategy and compliance, visit our website. This has been your Interactive Accountant's News Brief. Thanks for watching. For more information, reach out to us online, on social media, or just give us a call. We look forward to hearing from you.